On Thursday, Moody's downgraded 15 large banks, including 5 of the largest U.S. lenders. Downgrades sound bad, but how bad is it really for the U.S. economy? Maureen, what do you think?
I think this is a pretty bad scenario right now. It's not quite a death knell for the U.S. economy, but it just does put another nail in the coffin of these larger banks. We've seen them, they're under a lot of pressure. Profit margins are really thinning. There's a lot of regulation. And we can debate whether or not this specifically affects lending, but it just makes it a little bit tougher for them to do business.
I agree that it's bad for profits and it's bad for the shareholders of the banks, but I'm not sure it's bad for borrowers. The banks have kind of, after the financial crisis, gone back to a more simpler system. They take in all these deposits and they use those deposits to lend. They don't necessarily go into the capital markets as much as they used to. And right now they have a lot of deposits. It's kind of their choice that they're not lending.
But how does it not affect them? I mean, even when they're trading, they're making profits on that money, and the profits then go back and they'll say this helps us do our business and make loans. How does it not, if profitability is getting cut, how does it not then flow back into curtailing lending?
It's going to be hard for banks to borrow. And what they use that borrowed money for is to trade. And so it's going to be harder for them to trade. But it won't necessarily be harder for them to make regular loans. For the regular person who's doing a mortgage, or for the small business that's borrowing directly from a bank, I don't see how this changes things, considering banks have all this excess deposits right now.
But if you look at stock prices, share prices of all these banks, I mean, they're a slim fraction of what they were in many cases before the financial crisis. So I think that shows just how scared investors are.
Right. Well, I think it's clear that they had a higher credit rating and their stock prices traded at a higher rate or higher price than they should have. And that's what we're seeing now.
And maybe this is just the new normal.
It's the new normal.